Good afternoon. Good afternoon, everyone. This is Bag It On. Happy 4th of July. It is Friday, July 2nd, and it is about 12:30. And we do want to wish everyone a great 4th of July. And hopefully you've had a great week. We have some time on our hands. We primarily try to have all of our trading done for the week by Friday. So we like to take Friday off. We certainly have it done by noon. And then we will stick around to watch the Friday afternoon price action and see how the week wants to wrap up. A lot of noise going on right now in the market, right? A lot of noise about we're breaking out, we're going to new highs, the market's never going to come down, the Fed's doing this, and it's never going to, come back, and yada yada yada. We don't get caught up in any of that. We are posting our position, stating our position. It is never, although it doesn't phase us one way or the other. It's never easy, to put out a difference that is diametrically opposed to 99.9% of everybody on the Twitter sphere. It'd be so easy, just buy the market, buy the market, it's never coming down, never coming down. Yeah, that's what you want to do. Okay. um Let me explain to you what you're looking at and why we're saying what we're saying. And we primarily focus on the S&P. S&P has the 500 most important companies in the country, 500 of the most important companies in the world. The Dow only has 30. Some of those are the same companies. Pretty easy to push that around. And the Nasdaq is pretty well laden with tech. It's tech, tech, tech. And even the S&P is quite heavily laden with tech these days. But this radar that we're using helps us to make a dispassionate, unemotional, objective, and a consistent view on the market. And what we're looking at here is the ES on a daily basis. The mean is 4213.75. We're currently at 4330. 4330. We are well beyond, measured in standard deviations, well beyond that mean. This is not where we put money to work, nor is it where we believe that professional money managers or professional traders will put money to work either. Now, they'll be in there, they might be selling some calls, but in terms of committing new capital, not likely they're going to be putting it in here, up here. The other thing that we notice, of course, is the NQ, and it's trading currently at 14,672. The mean is 13,000, about 1,000 points back. It's up here, pushing also the highs. And it is the tech sector, and it's only the tech sector. Because when we drop down, take a look at what's going on with the Russell. Now, the Russell is 2,000 small caps. It's at 22.99, and they've been selling it all day. Where is the mean? 22.99. Where was it this morning? It was up here. It was about 1% higher, a full 1%, and they've been selling it all day, and it's come all the way back to the mean today. Divergence. The Dow, sake of 30 companies, it's at 34,633. It's about 1% off of its all-time high. It's basically, a little bit north of its mean, but nowhere near. But it isn't that important a market to us. All of these markets are commoditized in that they will all go together. It is highly, highly unlikely that these highs on the S&P and the Nasdaq can hold in light of what the Russell is doing, in light of what the Dow is doing, And if you, these are cap weighted. If you look at these indices on an equal weighting basis, giving each stock an equal weighting, you can see that the leadership is very, very narrow. In narrow leadership, things don't end usually very well. It's like a branch on a tree. It just gets heavier and heavier, and then it cracks. We're also looking at the VIX. The VIX has at this level has more or less stopped going down. It's at about VIX futures 16, 17. So when we have the VIX here, we don't want to be shorting the VIX, and when we have the market here, we don't want to be buying it. So that's our position. We think over the next 20 to 25 days, if not sooner, these markets will come in, and anybody buying up at these highs will have crocodile tears if they have not defined their risk and hedged themselves. We're not suggesting anybody, short the market or do anything with their money, but we did want to give you some insights as to who we are, why we're saying what we're saying, and we're merely from an educational standpoint pointing out what we see. If we're wrong, we'll be wrong. But we're very much thinking that in short order, this S&P will be back down, maybe as early as next week at 42.13. And usually when we push out as far as we do, when we come back to the mean, they usually overcorrect. And I wouldn't be the least bit surprised. We're back down to 4,000. On the SPY, there is a gap between 403 and 406, and most gap ups get filled. Now we may go up a little bit more today. We don't read much into it. The volume is weak, and again, the breadth is not there. It very well may be some bearish capitulation, some young bear cubs getting oversized, overeager on the short side, and being undercapitalized. And the gamma squeeze on some of these option plays can be pretty brutal if you're on the wrong side, but usually short-lived in our view. We wish everyone the very best. Have a great rest of the day. We'll see where the markets close, where the folks want to lay their head this weekend. Have a great 4th. And again, as always, if you ever want to discuss what we're about, we are a mentoring site. We don't necessarily say to any one person, this is the way to trade, but we do share with you our approach, and more importantly, the tools that we have developed so that this decision-making software can sit on your computer. You can set it up to your liking, monitor what you want to monitor, and infer what you want to infer. Basically, trading your game. Not my game, not anyone else's. And we wish you the best. My phone number 813-758-8263. Thanks. Have a great weekend.